Hi, guys. Thank you so much for joining me. I'm Jen. Welcome to Blockchain Banter. I'm here with Mark Richardson, project lead at Bancor, and Oliver and E from Aureus Money, founder, CTO, and co-founder as well, I believe, right?
Yes.
Right. That's right.
So we are talking about RWAs and regulation today and kind of what I see as crypto's turning point. And I think we've gone through certain hype cycles, a lot of hype cycles, and RWAs have kind of maintained their position as one of the leading narratives for some time now. And I'm not seeing that really slow down at all. So I'm really happy to have you guys here with us, to kind of discuss what it is you're building, RWAs in general. Mark as well, thank you for joining me. Let's start off with some brief introductions, maybe of you guys, personally, and Aureus.money as well. Now, is it Aureus.money?
It's mostly Aureus.
Aureus.
It's actually alluding to an ancient gold coin in ancient Rome. And when the empire was at its height, the coin was still full of gold. And then in the later days, when they started to mixing the metals, it lost its name Aureus and became Solidus and other names. But the Aureus stands for the true gold coin of ancient Rome.
I had no idea. Okay, so now we got a little backstory on that, right? Let's hear about you guys and a little bit more about Aureus then. Who wants to start? Oliver or Yves, you want to start?
Oliver can start.
Please go ahead.
Okay.
I can start as well.
So my name is Yves Wuri. I'm the founder of Aureus.money. I had the idea to found Aureus in the early beginning when Ethereum came to the scene with their smart contracts. And already at that time, I had some colleagues in the banking sector, and I understood that their technology is really outdated. And I immediately understood that since Bitcoin was such a secure network, if you would add smart contracts to it, then it must be something interesting for the traditional finance sector. But it took a lot of years until we were here where we are at now discussing RWAs. So I'm heading over to Oliver.
Yeah, happy to. So for me, my background is mostly in traditional finance. Like for me, it was very similar to Yves. Discovered Yves very early on, and I worked for the early part of my career in an infrastructure private equity fund, basically in TradFi, chasing the kind of assets that we now want to bring on chain. And if you've really been like in the sector, like I have, like you understand how much of a journey it is to come from that informal sector, like not just like getting digitized, but coming on chain. And like years back, I was already proposing this idea and was like pitching this to some people. But back then it was simply unthinkable to have like assets being traded on chain or in any sort of like heavily formalized fashion. So now I think RWA is like an idea whose time has come, as you say. So that was when I joined forces with Yves, and we started developing Aureus.
It's surprising to hear that this idea came, like, did you say that you started thinking about this when like smart contracts and Ethereum first came around?
Correct. Yeah, I always thought that it makes a lot of sense to use this for traditional finance. And over the years, I was surprised that it never happened, to the extent that I imagined that it should happen. And then eventually, I decided to get active in the space and actually to start building products.
That's awesome. Okay, so we're gonna dig obviously more into Aureus. I'm gonna pass it over to Mark first. Mark, maybe tell us a little bit about yourself and Bancor and Carbon DeFi.
Sure. I'll keep it brief. I used to be an organic synthetic chemist. I joined crypto in 2020, first as a sort of anonymous community member / volunteer. I started contracting for Bancor in January of 2021, first as a researcher, then the head of research, then the project architect, and now the project lead. And Carbon DeFi is the flagship product of Bancor. and I designed it to be an order book-like sort of structure. And so it's, it has all of the functionality that you would expect of an order book, but with a lot of additional, functionality that traditional order books don't have. And so I'm very proud of the product. We currently have it deployed on Ethereum mainnet and a bunch of other chains, most recently on TAC, which is the Ethereum virtual machine compliant version of the TON network. And yeah, it's I think it's a fantastic product. I'm very proud of it.
Thank you so much, and we'll get into that a little bit more as well. Oliver, I'm gonna start with you. You said that RWAs have kind of like, now is kind of the time, right? Their time has come. What makes you say that? And Eve, obviously jump into this, if you want to add it all here. But what makes you think that now is the time for RWAs?
Yeah, so very happy to. I think like right now, all the elements that kind of have to go into it to make it really happen, they're like basically at the level of progression where they can actually be adopted by institutional players. Like we have compliance, we have technology, we have the general acceptance and like understanding of crypto that just hasn't been there before. And like technology, like one part of this is it's really not, many people think, okay, this could have been done, like everything could have been decentralized like 5 years ago already, but this is not true. Like to cope with like the requirements of traditional finance, like the scale, the compliance, and like a lot of other functionality, and much of this, like I'm sure we're going to cover it later, is captured by Bancor Carbon. It just wasn't there, but especially like a big problem was compliance. Like some people, they will always say, okay, but like real estate has been, been tokenized for some years already by certain players. And like some of this is more or less in a gray zone. Like we spoke to many players that do it and they do it very successfully. And it's kind of accepted and it works, I guess, until like at some point the authorities are going to be waiting at the border for you. And the big problem is really for institutional players, even if there is some sort of regulation that can be interpreted in a way, and maybe there's even been some precedents where it worked. Like this might work if you do like small real estate projects, like owners of holiday homes, like small time real estate funds or so. But if you go into the office of like a major investment fund, a big bank, or like a multi $100 million asset owner, and you pitch this to them, then they are not going to rely on like regulation that will hopefully rule in their favor, because ultimately the big question that they will ask you is enforceability. Like they are going to be concerned about the case where they stand in a court of law, whichever is specified in the contract, and they actually have to make their case and like get their money back out. And much of this enforceability in like not just crypto, also outside of crypto, in the private markets especially, is like a massive concern, because oftentimes it's very dysfunctional for private markets. So now for the first time and forever, and I will let Eve speak more on the DLT Act in Switzerland, the Swiss legislation on distributed ledger securities. But for the first time, basically now you have in writing that just says, okay, one token on the blockchain equals one share. It's basically the same. As long as you follow this process, everything else will remain the same as if you have a physical share. And this is very easy to understand for also these institutional investors who now slowly like get some appetite for crypto, for the liquidity in crypto and so on. And if you show up with something like that and you have a blueprint of like solid legal frameworks and so on, you go into the office, now is really the time that you can actually convince people and they're actually willing to adopt crypto. Like, in fact, they start reaching out to you because they hear from someone that you might be able to help them, because now they want to be one of the first ones, now that this legal concern is done, that can tap into all of this liquidity. Because I can talk about this later more, I can ramble about this for hours, but there's so many issues in the private markets, that the inefficiencies, trap capital, and so on, that can be solved with crypto.
Eve, did you want to add to that at all? I know Oliver said
Yes.
at one point, you could probably speak a little bit more about one of the specific points he was making.
Of course, I'd love to add to that. Oliver, as usual, he made some great points. And I was waiting to say that actually compliance, I see it as an acronym for enforcement of contracts. I remember when smart contracts came along, the funny thing is that these smart contracts, they are perfectly and automatically enforceable. Yes, that's true. But what is the thing that's actually being enforced, right? I mean, if we write a smart contract that Thomas is gonna rent me out his car, that's a great thing. The smart contract is gonna do exactly the thing that it's programmed to do. But we still have Thomas and his car. And in the real world, he actually has to do something, right? So for Thomas to be forced to lend me his car according to the contracts, there has to be this enforcement. And in the real world, for a contract to be actually valid, there has to be a legal basis for these contracts to be valid. And it took all these years for, in some countries, Switzerland is one of the countries, to there actually be a legal enforceability of these contracts. And I think that is really the key. That is why now the time for RWAs has come. Not because the technology changed, the technology is the same or similar as it has been like 10 or 5 or 3 years ago. But what has changed is the situation where governments actually start to decide to honor these type of contracts that we're signing on these distributed ledgers.
Mark, do you have an opinion on like the actual RWAs and it being their time, or want to add or discuss anything that Oliver and Ethan mentioned?
No, I don't have much to add, honestly. But I think that you know, I share the perspective. I think my diagnosis is the same. Technologically, there really hasn't been much of a bottleneck to making these things happen. It is entirely policy based, you know, yeah, and compliance based considerations. I think that have been the bottleneck. It's not necessarily just things like the tokenized like shares of things or something like that necessarily, or even legal precedent for action against people that you know, might try to set up something like this and then, you know, take it all to the Caymans and never talk to anyone again. Like those are certainly valid considerations that, you know, and concerns that people might have. But I think it's also whether or not you can even offer this service to someone. Because if you are setting it up appropriately and that you are, you know, agreeing to shoulder the legal burden of offering a real world asset, whether it be real estate or gold or, you know, a tokenized security or whatever it happens to be, whether or not the regulator agrees that the manner in which you're offering it to consumers is compliant is another factor entirely. And yeah, it's been really nice to see. I think Switzerland has really been leading the you know, the initiative on this, and you know, a couple of other jurisdictions around the world, but Switzerland has really been a really terrific standard to follow, and I think a bright light that the rest of you know, the regulators around the world should follow.
I think, I mean, Swiss has kind of been longstanding in that position to, you know, I think, Mark, you guys are a Swiss nonprofit as well, right? Based in from 2016-ish. So it's nice to also kind of see that. With RWAs in general, right? We're kind of talking about now why now might be their time. Let's talk about the different types of RWAs, because Oliver, you said, you know, there were certain things that you were kind of chasing in TradFi, right? That you guys are maybe working with now. You had mentioned real estate. I think real estate is one of the ones that we see probably spoken about most often. Gold, I would say, you know, I don't know if you guys agree, is probably the most common, or not necessarily common, but popular sort of RWA that we're seeing right now. What are some others, or what have you guys, like, what is your focus on at the moment? And Mark, feel free, I know it's not your focus, right? But seeing these tokenized assets maybe on Carbon DeFi or in general, what do you guys, what's your view on this?
Yeah, maybe I.
Go ahead.
Okay, go ahead, Mark.
Sure. I agree that there's, in particular, a strong appetite for things like silver and gold. This is the, you know, it was one of the things that I've previously brought up on these calls is that especially within the Bitcoin maximalist community, but also Ethereum maximalists or whatever, a lot of them are maximalists, not necessarily because of their love of Bitcoin and Ethereum, because of their like strong rejection of like the US dollar, right, or the Australian dollar, whatever it happens to be. And one of the things that regularly comes up is that they've become so insanely wealthy, from holding Bitcoin and Ethereum over such long periods of time, that measuring it in US dollars doesn't really make sense, right? Because everything has been going up versus the US dollar. The world it could be technically in a like a strong recession right now, but the value of the dollar is coming down so quickly that the stock market looks like it's doing really well. It's a tricky thing. And so with I think stablecoins and the way that they interact with regular fiat currency is still useful, because all of us, as maximalist as you might be, still have to live in a place that generally accepts cash fiat as legal tender. And so the ability to convert back and forth and move value between blockchains and your bank account is definitely required. But in terms of keeping something when you're de-risking, right? So let's say that Bitcoin's just recently made an all-time high. Now you'll see that a lot of Twitter posts and things have been coming out about people thinking about what they're scaling out into, and there's this conflict because at the moment it doesn't feel safe to scale out of Bitcoin into the US dollar. And so what people would like to do is to scale out of Bitcoin into something like silver or gold, right? Like if they are expecting a capitulation on Bitcoin at some point in the future, they still think the capitulation on the US dollar will be worse. And so I think to bring that kind of flexibility into a blockchain by having a token that you can scale out into, rather than having to go through the process of moving your Bitcoin back and forth between centralized exchanges and so on, is it's not just sensible, it's convenient, and there's obviously a market and consumer interest and demand for that sort of thing. So I think it's a very natural progression, and I don't think that it's necessarily new. But I think with the fiscal policies, particularly in the United States, might be exacerbating what has always been sort of an underlying anxiety for what it even means, to scale out of your crypto position at a market top.
Even Oliver, you guys want to
points.
go ahead? You want to add to? I mean, not even add to what he was saying. Do you guys have a take on why we're seeing gold as probably one of the most popular? And you guys, why you've chosen? I mean, your ecosystem kind of runs on a gold-backed coin, right?
Right.
So tell me a little bit about why gold, what it is you guys are seeing in terms of just popular RWAs, but maybe just sticking on the gold topic for a minute here.
Yeah, Eve, please.
Yeah. Okay. So
go
I
ahead.
can take the goal point. So there's a book that has been written by a guy. His name is Ferdinand Phipps. He used to be the manager of the Rothschild Bank in Switzerland, and he wrote a book. It's called Gold Wars. I suggest everyone who wants to read a good book should read the book about Gold Wars. And he wrote it at a time where the Swiss had a vote. In Switzerland, we actually have direct democracy. And some people, they think democracy is a good idea. Other people who are maybe a bit more educated in systems of government think it's not such a good idea. And the Swiss had a vote whether or not they want to keep the gold standard. And I mean, it wasn't really a gold standard, but at that time, the Swiss franc was backed a lot by gold. And they had a vote if it's okay to sell a lot of this gold. And the rest is history. So they did sell a lot of this gold. And Ferdinand Phipps, he kind of lost his mind. He said, "What are you doing? Are you crazy? Don't sell the gold. If you're going to sell the gold, your currency is going to go down, right?" So if we look at the history of money, it's totally clear the way the financial system is built up. Fiat currency has to inflate. It has to inflate. It's a mathematical certainty that it has to inflate. And the reason why is actually very simple, but it's kind of hard to wrap your head around. It's most money is issued as credit and debt. But when you issue the credit and debt and you give someone the principal of a loan, let's say Oli, he borrows $1 million, a million Swiss franc. We give him the principal and now he pays interest, let's say 10%. But the interest hasn't been minted when he takes up this loan. And for him to be able to pay back 1,100,000 Swiss francs, 10%, he needs to find this money somewhere. So if the money supply isn't inflated, Oli will not be able to pay back the debt. That's kind of the dirty secret of fiat currencies, which is actually the elephant in the room nobody talks about. So the system works that if the money supply isn't inflated, the entire system just breaks down. So it's clear that given all these other things stay the same, hard assets compared to fiat currencies, they're going to increase in value if the supply of these hard assets is relatively constrained. So now you're asking why gold, and I'll give you another piece of very important information. You all know Tether, right? Tether has the best financial business. Tether is the best business model of the last 10 years when it comes to making money. I think only OnlyFans beat Tether when it comes to a small team and how much money is being made per employee. It's like an insane number. I think they're making $30 million per employee or something crazy like this. And of any company in the world that would have a vested interest into shilling the US dollars and US treasuries, Tether is one of the number one in the world, right? You agree with me on this statement? I guess so. But it turns out Tether, they wrote a white paper, Tether Gold white paper. Now it's hard to find, but they did write a white paper that is called the Tether Gold white paper. And in this own white paper that they have written, they are saying, we believe that in the long term, and I'm paraphrasing here, okay? Tether Gold is going to be the much better product than our Treasury Tether white paper. Maybe that's the reason why it's hard to find now. And the reason is because they're saying what people who are well versed in the financial sector know is if you have gold, you can abstract any fiat currency on this, right? I can send $10 to Jen, but the actual asset that I'm sending to her is gold. And that's the way how countries deal with each other. So before let's say, the euro, France would have a debt to Germany. France would have le franc français, and the Germany would have the Deutschmark. And now they want to settle debts. They're not going to send each other any papers. They're going to have to settle in gold. That's how they did it forever. And this is how it's going to be in the future, probably again very soon. So that's one of the reasons why we chose gold as the stable value.
Super interesting. Oliver, do you want to add to that at all?
Just a little bit, like,
go ahead.
Yeah, just briefly, because it basically ties back what Yves said is exactly what Mark said as well. While we need this base layer currency where we want to use gold is essentially, if people invest in real world asset, especially like these are a lot of TradFi people, it's also going to be crypto people, but a lot of TradFi people that are going to become interested in the sector. Like there are people that are very conscious of preserving value, of not losing value to inflation and so on. Also when they scale in and out of investments. So you want to scale out of something with these investments or into these investments by holding not US dollar or another fiat currency, but holding gold, which is why all the hubs, all the liquidity pools essentially that ultimately are going to exist with these assets on our platform eventually, like they will route through the gold token just to use that. And I think like the other thing, we're maybe going to talk about it later, gold obviously becomes increasingly relevant for banks and central banks right now because of the legislation changes there. So they want to increasingly have it on their balance sheets. It also gives you a very good bridge, like it's another Trojan horse basically, where you can get a foot in the door with them and then onboard them to other crypto products as well. The only thing that I would add is then on top of these interesting RWA products, like currently I think most of the financial players that are engaged in the sector, like they target more the low-hanging fruits because for them the regulation is basically already complete. It's like money market funds, it's bonds, it's ETFs, but all of these like they're not as revolutionary, right? Because even as a retail investor, you already had access to these before. It's nothing new that you get access to. It just becomes more efficient, more convenient. The transaction costs are going to be lower. It has some like utility benefits. But ultimately, I think what's going to be very interesting is bringing more physical assets from the real world on chain. Like currently, the best performing asset class that is out there, even better than like the stock markets, is if you could park your money in private infrastructure. But obviously, like this, you can only do if you have like several millions of capital laying around that you can lock up for 10 years plus by investing it through a private equity fund. But essentially, these assets, they're very capital hungry, and they're really good assets because real estate is nice as well, but it's not our main focus simply because real estate still carries a lot of risks. You never exactly know how the trend of real estate in a certain region is, whether all of a sudden more houses are going to be built, whether they're going to introduce some sort of legislation that are going to cap how much rent people can charge. They always have to be rent out and so on. Like things like COVID or just like other intrusions, they can make that very difficult to get like steady returns. But if you look, for instance, at data centers or energy assets, which is more the sector that I also come from, there's a lot of assets out there that are very large and their returns are essentially the same as like real estate or regular private equity, at least of many of them. But the risk is relatively low because like once you build, say, a solar plant somewhere, you build a 200 megawatt solar plant in South Africa and it's connected to the grid, you sign a 20-year agreement with the South African utility. It's basically a government contract that pays you at least the floor price for the next 20 years. So as long as the sun doesn't stop to shine, you basically get relatively low risk, decent capital returns on your equity. And now like we can continue this conversation because for DeFi, this has a lot of implications because all of a sudden you have a tokenized asset now that can serve as collateral, that can like benefit from all of the DeFi utility, that can be levered up, that can be like recycled and so on. But you will not have like these cascades, these liquidation cascades, because someone is going to scoop up this asset when the price goes down, because the valuation of this asset is not based on like hopes and beliefs like many other cryptocurrencies, but it's actually based on like real world cash flows that you can track on chain. Like ultimately you will see on chain the track record of this asset producing energy, this energy being sold. So this security makes this an insane collateral, also for future debt market and so on in DeFi. So I think this is going to be like it's way harder to achieve that than like bringing a bond on chain. So make no mistake about that, but I think this is going to be one of the biggest revolutions for private markets.
A few things. First of all, this is the first like sort of conversation that I'm exposed to where we're talking about real world assets at such a scale, right? So it's fascinating to have this sort of discussion and to think about it and get that sort of bigger picture, right? Because like you were saying, I think what others are kind of dabbling in at the moment, that what you called low hanging fruit, is really what we're seeing a lot of, you know? So to think of that puts this into perspective really on how big I think RWAs can be. Before we move on, just touching on what you guys have said earlier about gold, Mark, we have had this conversation before. You ran us a trading strategy and it was, you know, Bitcoin versus gold. And I wrote a blog about it because I thought it was so cool to see. And it was such a great point to make afterwards. So to see like and hear that this is why you guys are doing what it is that you're doing, I think is just fantastic. So I wanted to commend you on that as well. You know, you see a lot of these tokens and these projects paired with others, but you've really kind of pieced this together very nicely, in my opinion. The sort of power plants and things that you were just speaking about, Oliver, is this something that you guys are looking into, or is this something that you see in the future? And is this why? Because what really, really got my attention initially about Aureus, right? Not initially, but what really made me want to reach out to you guys was there was this big stress I felt in a good way on how you were compliant, right? And I think that a lot of projects scream decentralized and they really push these other things out there. And compliance and regulation are kind of these topics where we're not really sure, like, do we want to talk about it? Do we want regulation? Don't we? I think the industry is still torn. We scream that we don't, but then when we have some sort of regulation or some sort of clarity, everybody's excited because it suddenly means mass adoption and, you know, everybody's going to all of a sudden start buying crypto, right? But you don't really see many projects that are out there really saying, look, like, we are compliant, big and bold, you know? So is this really why you're looking to do this, is because you're looking to move beyond and into these sorts of energy producing, you know, infrastructure plays? Either one, Eve or Oliver.
Yeah, I'm happy to. I'm happy to get started. It's definitely one of the reasons. Like it's definitely like less appealing as an activity to just sit in the back office and like come up with like legal blueprints and legal structuring and potential term sheets, so you can bring all of this on chain. But it ties back to what I said in the beginning. It's if you go into an office and we talk to some of these players, we talk to people in banking that are close to like major banking players, to central banks that are asset owners, that have assets or invest in assets. And if we go into these offices, we have to show up prepared. Like they're gonna be fine with all of the technology. They're gonna understand half of it, and maybe they're even going to be excited about it. But ultimately, what they're asking us is about the regulation, and we cannot come with a half-baked answer there. Otherwise, like this is the only meeting that you will get with them. Essentially, what you have to come up with is like you need to present to them the regulation. You need to present to them the blueprint. Everything has to be fleshed out. Essentially, how these assets are going to come on chain fully by the rule book, how they're going to be offered in different jurisdictions. Like obviously, the legislation, like today, it differs heavily across regions, so that makes this very tedious to be fully compliant, like where you effectively are offering a security, where you aren't, where you are running a securities exchange, where you need a prospectus before you can essentially even offer this asset to anyone, before you can even market it. But all of these have to pull together. However, this is the good thing about the regulation. Like once you have pulled all of it together and you fully understand it, when you show up to these offices, then you can actually make a case and they're actually going to be interested. Like if the regulation wouldn't there and we wouldn't be able to do all of that, then we also couldn't present to them a compelling and coherent case on how they are going to stay within the boundaries of the law. Eve, I don't know whether you want to add anything to that.
Yeah, I want to add something to it, but I want to say something also about gold that relates to the compliance somewhat. Okay, so if you don't mind, let me say it. So
not at all.
Actually, one important point I don't want to forget in this call to answer your question about why gold and why compliance is Basel III. So as you know, there is a Bank for International Settlement. And they give Weisungen. I don't really know the English word for Weisungen. It basically means it's like advice, but it's more stronger than advice. It's like not telling you what to do, but kind of telling you what you better should be doing.
Mm-hmm.
Yeah, it's non-binding. Yeah, it's like non-binding guidelines from like law agencies, essentially.
Okay.
Right. And when they came out with Basel III, one of the big things there was that before Basel III, gold was treated as a tier 3 asset on balance sheets of financial institutions. But after Basel III, gold was treated as a tier 1 asset, which means gold is basically the equivalent of cash, like money, Swiss francs, US dollars. The only difference is that it's seen as not as liquid as things like treasuries or US dollars. So when we come out with our gold token, and it's going to be ISO 2022 compliant, which we're going to maybe talk later because this comes into the compliance, we basically have a tier 1 asset that any type of financial institution can hold on their balance sheet. Now, what I want to say with compliance is one of the good things about compliance, one of the reasons why people should a little bit embrace compliance is because it standardizes. It allows different entities to work together more fluidly, right? Compliance is such a bad word. You know, people say want to be cool. They want to say, well, we do things like the way we want it here. We don't want to be compliant. But let's say you want to build a house and now you order screws, and the screws that you're ordering, they're not going to fit the, what is the thing that like a motor, like the thing that you call on top, that you screw on top of the screw. It doesn't fit together. Now you can not even start building a house, right? So without certain types of level of compliance, standardization, you can't really build an actual real financial system. And we see this in the DeFi space too, right? I mean, we have Chainlink, we have all these bridges, we have this dream of interoperability. And to be interoperable, you have to have some kind of ideas of whether you call it compliance or consensus or whatever you're going to call it across these different chains and ledgers. There has to be some order out of the chaos.
I want to, like, leaning into the compliance thing, right? I recently caught an interview that you did with Tracer. He's fantastic. It was a wonderful, it just clipped from this interview. He's great. He's so great. And this was about when you were looking into your privacy solution. So what I'm gathering, and maybe you can kind of elaborate or correct me, right? You are using different pieces of infrastructure to build out Aureus. And part of this was a privacy solution, or part of this is a privacy solution, right? So you were looking into different privacy solutions at the time, and you had said something that was interesting to me, and that was there were solutions that would work for you.
Yes.
But it meant that you would no longer be compliant. So how do you, like, what makes others compliant versus not, I guess, and how are you kind of finding these different pieces of infrastructure to make your vision come together?
Yeah, this is really a great question. And first, shout out to Tracer. He's really a great guy, and I'm very happy to have done the interview with him. So thank you, Tracer, if you're seeing this. So to answer your question, the issue is this. To become a fourth generational blockchain. So maybe let's go through the generations very briefly. First, you had Bitcoin. It solved the problem of double spend. And basically, the big thing is an alloidial title. Bitcoin solved the problem that if you have your keys, it's your crypto. Not your keys, not your crypto. If you have your keys, it's your crypto, and there is no double spend. Hello, Bitcoin, great innovation. After Bitcoin came Ethereum. We had smart contracts, but with Ethereum, we still have the problem that it's not really scalable in the sense that without layer 2s, not everyone could bank on Ethereum. Generation 3 blockchain is scalable blockchain, where we might not solve fully the blockchain trilemma, but at least we have solutions where we have enough transactions throughput to build a financial system on it. But to really be a generation 4 blockchain, you need privacy and identity. Why? Look, we talk a lot of compliance, but also at the heart, I'm a cypherpunk, okay? I love this whole cypherpunk ideas. And for me, the only real cryptocurrency is Monero. You know, I don't want to insult anybody, but Monero is really anonymous, right? Most people, when they think about Bitcoin, they actually, like if you ask them about Bitcoin, they start talking about Monero, you know? And you know what I want to say? Like they think it's so private. Bitcoin isn't as private as they think, but Monero is. But it turns out Monero isn't even listed on most exchanges, right? Why? Because it's dangerous to list Monero, because who uses Monero? I mean, some good people use Monero, some great people use Monero, but maybe some bad people also use Monero. And there we come closer to answering your question. The issue is the government and the society as a whole, okay, democracy as a whole, they are perfectly okay with Aunt Josephine having privacy for their transactions, right? They are perfectly understand that Aunt Josephine doesn't want everybody to see their bank account. But at the same time, if Osama bin Laden comes around and he purchases some remote controllers to fly airplanes into the Twin Towers, and then he says, well, I want my privacy, people are totally not okay with it. So the only viable privacy solution for a financial system that is supported by the police, supported by the people at large, is something where we have privacy, but if there are these outliers that are seen as a danger, somebody has to have the key to unlock the black box and open it up and look inside and say, well, let's see what you have actually been doing. Okay. And this is the compliance solution. This is the privacy solutions that we need. And as you know, Tracer, he's part of the Coty team, and Coty offers this type of compliance where the public can see your transactions, but if the government really comes, I don't know, they have these fancy terms, whatever this is, like affidavit or search warrant or whatever they have, they can go to the company and they can say, listen, this guy, we need to know what he's doing. And in cases like this, they can open the black box and they can show it to them. And this is the type of privacy solution that we need.
It's almost like there's transparency when there needs to be, right? I think transparency is one of the big things that we see in crypto and blockchain, but it's not necessarily always a good thing. Let's talk about some of your other pieces of infrastructure. So you guys are using Coty's garbled circuits, right? You're using their privacy solution. I think it's the garbled circuits or the privacy on demand. You are using their solutions.
Well,
go ahead.
I have to say we're planning to use them optionally if users want compliance, if users want privacy. That's it. But we cannot use, because mostly we're building on Hedera Hashgraph, and it's an optional thing. It's going to be an optional thing for users who want the privacy.
That's actually really nice as well. So you're talking about institutional grade and being ready for institutions, right? They probably will want that sort of privacy. But then those who are not going to maybe necessarily want that and stick to the roots of, you know, blockchain and DeFi and things of that sort may very well not.
Right.
Okay. So
and there might be trade-offs. There might always be trade-offs. So depending on which trade-offs you're willing to take, you can navigate more towards privacy or more towards speed or whatever trade-off you're.
I feel like this makes sense though, you know, because we talk about like the core ethos of crypto and blockchain and things like that. I mean, that was how many years ago, right? Like now but we're all talking about sticking to this core ethos, but then we want, you know, mass adoption and the next billion, you know, trillion users and all of this. And I feel like there has to be this sort of trade-off, right? And we have to kind of pick and choose. And maybe when the user is given that sort of decision to make, it might be less of a difficult pill to swallow, you know?
I would maybe just add like a small point on top of that, because a lot of people that in crypto are going to feel like almost offended if the government essentially, you know, has the possibility or certain law agencies. But like the thing is, like in the pure RWA space where we want to bring all of these projects on chain, you have to think about like if you tokenize an energy plant that is like crucial, like critical for the energy supply of the country, and the wallet gets hacked, and crypto gets stolen, essentially all of a sudden, like some North Korean hacker owns 10% of like a 500 megawatt power plant or something like this, there has to be some sort of fallback mechanism. This goes back to enforceability. Basically, there have to be mechanism, despite all of the efficiency gains that you get, despite all of the accessibility that people are going to have to these assets, like somewhere there needs to be a layer where there can be some control asserted over these assets. Otherwise, it's also bad for the holders of these assets themselves, depending on who has also governance and control. You know, many of the tokens, they're going to come with voting rights and things like that. There has to be some sort of control mechanism for this to not go completely out of control.
Yeah, I've often been, you know, on the complete other side of the aisle when it comes to this like coder's law philosophy in blockchains, because, you know, what you're really saying is that the blockchain should be secure enough, the smart contract secure enough, or whatever, to prohibit, you know, anyone from being able to exploit that system or whatever. And if anything, the last decade has taught us that, you know, you can never anticipate everything. You know, even some of the best programmers in, you know, in the Ethereum community have been caught out, not because their smart contracts are bad, but because the compiler had a bug in it. and those can be very, very difficult to find. So difficult to find that you need hundreds of thousands of literal slave labor, under the threat of violence in North Korea looking for them. Like, that's the only way you're going to find it. And you don't want them to find it before you do, and it's going to happen. But the philosophy that, the security system is there, and if you defeat it, then you're somehow entitled to the spoils of that endeavor, is completely retarded. That's like saying that, I have locks on my house, and so if you can get in, you're welcome to take whatever you want. Like, that, it's just weird that there's this like double standard when it comes to security and blockchains. And just like with your house, if someone takes an axe to the front door, you don't say, oh, well, code is law. They managed to get through the door, and so I have to shoulder the burden of having my belongings stolen. What actually happens in that circumstance is someone says, no, I'm going to call the police and I'm going to try and get my stuff back. And I think that philosophy should extend naturally to digital systems. And for that to work, there needs to be policy and law that says that you aren't welcome to to break into someone's house. Now, that doesn't mean that that the standards necessarily become relaxed. In the same way that it's illegal to have your belongings stolen, doesn't mean that people don't lock their house, or we don't have security systems in place. Like, there's still this assumption that there is a minimum level of security, sometimes a maximum level of security, assumption that you're going to do something reasonable to protect what it is that you have. And if you don't take those measures, then often the law will say, no, I mean, we're not going to help you in this case. And I just think that there needs to be some more pragmatism there. But it's interesting to point out that if you agree with my perspective, it does assume a level of regulatory, cooperation, because those laws need to exist and be enforceable. And so I don't think, I think that the cryptocurrency community, blockchain community, has had enough of, this you're welcome to what I have if you can get it philosophy, and will probably be a little bit more welcoming of this kind of regulation that says that if your stuff is stolen, that someone has the task of getting it back for you.
I would agree.
Right.
I think that, oh, go ahead. Eve, go ahead.
No, sorry. I just wanted to say I agree with what you said.
Don't apologize. I do as well. Actually, I think that we're seeing more of this. Before it was kind of like the free for all in the Wild West, and it's been referred to as the Wild West for so long. But I think as we all grow, as the industry grows, so are the users. And we're it's fun to play in the casino when we want to play in the casino, right? But when I want to hold on to, whatever it is I've got, and then all of a sudden I turn around and I clicked something wrong, or something happened, and now I'm out, right? Like, it is not a situation that any of us want to be in, or anything that's going to help our industry really move forward at all. I do have one final question. Oh, you know what? We have 2 minutes left. Darn, you guys. I wanted to keep going. Okay.
I have a hard stop, Jen, by the way.
I know, you usually always do. Okay, so let me do this instead. I want to invite you guys back, because I've really enjoyed this conversation. And to be honest, I really didn't get to a lot of what I wanted to get to. And I'm really interested in doing this, especially now that we started talking about, the different sort of infrastructure that you're using, and kind of the things that we're seeing more of within our industry and users, just kind of outgrowing certain things and the direction that you're moving. I also want to touch on, you said something about Carbon DeFi and Bancor coming into play earlier, Oliver, and we kind of went right past that. And now we're at the top of the hour, so we really can't get into it at all. But right. I would love to have you guys back to kind of just keep the conversation going, and take the last couple of minutes to give you the opportunity to really just any closing thoughts, anything that you want to leave our viewers with. Mark, I know do you guys have a hard stop as well right now? Oliver?
It's 11 p.m. here. It's fine.
Okay, I'm going to pass it to Mark really quickly because I know he's got a hard stop. Mark, is there anything, any final thoughts you want to throw out there? Anything that you want to give our audience, as something to think about and to sit on?
No, but I mean, nothing prescriptive. But I am really excited for what Aureus is doing. I think that the setup, both with respect to the getting all of the establishing policy right in place and being open with the regulator. And I know that sounds weird to a lot of people because their regulators have been hostile for the last 10 years. But these guys are Swiss, right? FINRA is a delightful person to speak to compared to a lot of the other regulators around the world. But yeah, I think that the preparation and planning that's gone into this project is phenomenally good, and I'm genuinely really interested to see what they get done. I will be one of your first users once it's live.
Thank you. That's an honor. That's an honor from you, Mark, because we have big respect for your products at Bancor. I think you guys are titans of the DeFi industry. In my opinion, you kind of invented DeFi, okay? When I introduce people, I say, these are the guys who invented the AMM, but now they invented a much better product even than the AMM, which is Carbon DeFi. And I think your time to shine is really going to come. I know we don't have time to discuss it in the call, but one of the biggest criticisms that Oliver had, and Oliver, he's really a smart kid, where he said, nobody is going to sell a $20 million infrastructure asset on Uniswap, right? And that is so true. But now with Carbon DeFi, with your idea of an on-chain order book, maybe a lot of people, they don't know it yet, but this is going to be a product that going to have so much demand. And you guys brought the solution, and we're really happy for this. I think we couldn't really do what we want to do without this part of the puzzle.
Thank you so much for your kind words. I need to drop. It's been a pleasure speaking with all of you, and I look forward to our next call.
See you, Mark. Thank you.
Guys. Thank you, Mark.
Thank you, Mark.
Eve, you kind of dropped out there, for me at least. I heard up until, did you say Carbon DeFi as part of the puzzle?
Yes, actually,
yes.
The solution that you're offering, maybe Oliver will say more because he really has a great argument for your viewers. I think Oliver has one of the most bullish arguments on Bancor and Carbon DeFi than anyone could have.
I know we're at the top of the hour, so I don't want to, push it if you guys don't have time, but I think it's just interesting because it was thrown there, and then I know I'm going to get our community members that are going to be like, what the hell, Jen? You know what I mean? Like, what was that? So if you can just give us a little bit, that would be awesome. Oliver, go ahead.
No, happy to provide some closing words for that because, we didn't get to speak about it, but we are extremely excited about Bancor in general, but especially Carbon, because it brings basically the last missing puzzle piece in many ways. And like it basically goes back to what Eve just mentioned. It's like the infrastructure that you have to provide to cope with the compliance scale and just general structure and experience of a traditional finance player that makes large ticket transactions of big assets. Like this has not been there in DeFi, 3-4 years ago. And what Bancor is essentially offering, like many of the quirks that you have with Bancor Carbon, like the single-sided order book curves that you can provide. Like this not only complies with, for instance, what a private equity or private debt that would hold a large investment and wants to exit it towards like retail investors, secondary to another fund, to a bank, to a strategic investor, whatever it is. It doesn't only provide them with essentially what they are looking for, but it goes a bit beyond that. Like it allows them to effectively scale in and out of assets based on parameters that they can define. And this flexibility you have with no other solution in crypto. It's almost like you can define some sort of term sheet with like very elaborate terms that they're used to, and you can put it on the chain. It just sits there at the primitive order as a passive order, and the interface that it's exposed to is relatively primitive because like there's no like sketchy or elaborate mechanisms now that people could run sandwich attacks or like try to move the curve, like your order curve in any way or so. There's just simply no incentive for it because you would just lose money and essentially play into the hands of the strategy maker, of the limit order owner. And like, I'm happy to talk about this in much more depth the next time we come on. I'm sure Mark will have a lot to add there because we would also, I would be very interested what he had in mind also in terms of the design philosophy when they came up with that, because many of these things are such a novelty, but they really for us like make such a strong case when we talk to these institutional players, when we present to them the infrastructure solution by bringing these different chains, but especially Bancor Carbon together and offer to them.
Thank you so much for giving us a little bit more of this, and honestly, more than what I was even expecting. I'll have to make sure that Mark hears that because it is a huge compliment with it being his design and everything. And I also am very curious because, you know, I was with Bancor, when Carbon DeFi was being designed and when it was released, and I'm seeing more projects kind of use Carbon DeFi as a piece of infrastructure, really, right? To be this sort of piece in their puzzle and to bring their project together, to support it in a certain way. So I'm curious also if Mark really had this in mind when he was designing this, and institutions versus maybe retail traders and liquidity providers. But we'll have this for the continuation. I would genuinely love to have you guys back. I really did enjoy the conversation very much. I'm looking forward to you guys going live. I know that you aren't yet, but you will be on Hedera, right? I won't ask when, but I hope that you'll keep us updated so that we can keep everyone updated on when you are. And in the meantime, let's get together offline and schedule, you know, a part 2. I think it would be fantastic to do so.
Very gladly.
Yeah. Awesome.
Thank you, Jen.
Okay. No, I really appreciate you guys jumping on here and joining me and for the fantastic conversation. I have so much to learn from you guys, so I really look forward to it. Thank you again, and thank you to all of our viewers as well. Until next time. We'll see you guys soon.
Thank you so much. Really appreciate it.
See you guys. Thank you.
Thank you so much. Goodbye.
Bye-bye.
Bye-bye.